Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for February 16th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the week. We have the ES here in the daily time frame. What you can see is here over the last few sessions here, we got a test into 1804 to 1811. That was a very important test. Price dropped into that zone, and we mentioned if bulls can defend that area, if they can keep this zone bid, the expectation would be for a return back to the HV and above at 1921. And you can see here after the holiday session, we've kind of gotten a gap up, a big push up, and now we're holding basically 1878 right now. What's really important is how price has pushed beyond the previous week's close price here and is already testing the previous week's high. That's going to be important because that tells you right here 1858s are going to be very important. Bulls want to defend that zone for a continuation into 1921. Failure to hold 1858 opens up a return to prior lows with a shot at seeing a further continuation to the downside. So right now the expectation all along has been, let's see if bulls defend down here, because the expectation would be a return from 1800 back toward 1921 to continue this trading range pattern that we have going on. If we look at the intraday time frame, you can see right here, price kind of holding 1877 half, a little bit of a rounded off pattern here. And that's going to be very important. You can see kind of price trying to get higher and failing, trying to get above 1890, failing. You can see here overnight VWAP being offered a couple of times, as is the previous session's high price. So right now, if prices can't hold above 1877 half, the expectation would be for a pullback into 5-day VPOC 1859.75, and that's going to be a zone where bulls want to defend for a continuation higher. Any push beyond 1895 here opens up a continuation into 1898 half and 1909. Let's take a look at crude oil here. Crude oil has gotten a significant bounce here after holding below 27.56 for the better part of a day plus. You can see here this entire session and that entire range traded below 27.56, and in the upcoming day we saw price just explode back above that zone. And in overnight trading, we've seen price rally as high as the previous week's high at 31.38, and already seeing signs of weakness. That is going to be very important, because then we know that crude oil has been trending downward here. Every bounce has been a selling opportunity, and right now we've seen a solid rotation higher, and any push back toward value in a downtrending market should be seen as a selling opportunity. So when I mentioned that if these participants get trapped, the expectation would be for a return to 31.80 and a shot at 33.43. Price came very close to that 31.80 before being offered in overnight trading, and we're now back all the way at 29.43. So if this is going to be rejection here, and obviously we have the rest of the day to figure this out, to see how it plays out. But overall, if we're rejected on these highs, the expectation would be for another round of weakness ahead. So we'll see how that plays out. Keep an eye on 29.43, 29.45, that previous week's close. That's going to be an important zone to watch. Dropping into the lower time frame here, you can see how significantly crude oil was rejected in overnight trading here above basically 31.40. That price rally right into that zone, immediately rejected back to the previous session's close, 29.76, chopped around that area, and now we're below the previous low. So anytime price forms this little range here below the previous session's low price, 29.60 here, it's important to watch, because if price pops back above 29.60, look for a squeeze back toward the mid at 20.43. Failure to reestablish above 29.60 opens up a continuation back toward the downside targets here. We have 29.25 and 28.67 ahead. Now if we take a look at gold, gold has been very, very bullish. Obviously we had a big time parabolic rally out of this saucer bottom type of range. We've been right on top of this move all the way up. When price formed this type of pattern here, I mentioned that this was easily 3.5 times bigger than the average 10-day range here, and that's significant. When you form a smaller range like this after it, that's what I call the extreme reversal pattern, a pattern that I talk about in my book, Secrets of a Pivot Boss, and have built countless algorithms based off of this pattern. That usually leads to a snapback reaction here, and that's exactly what happened. We were looking for a push right into 1200. We actually got it all the way down into our key level of 1192. So that's going to be important here. After you get this big swing move back, are bulls going to defend here and squeeze farther to the upside, or are they going to release 1192 and open up a pushback all the way to 1130? We'll see, but 1192 is going to be the key level to watch. Now looking at the intraday time frame here, you can see that 1232 was very important. That was our key level last week. You can see how prices had built a head and shoulder type of pattern there, and I mentioned any failure to hold this level opens up a move back to previous 5-day VPOC. We got it in overnight movement here to the downside. So this is where bulls have come in to defend. Now that's an area that should remain bid until proven otherwise. Failure to hold that 1192 opens up a continuation back downward. Let's take a look now at the NQ. Here's the NQ. We talked about how significant this rejection tail was after prices tested below 38.93.5. There was a rejection of prices below 38.93.5, which was obviously that August low here. And upon rejecting that zone, I mentioned the implication that we could see a bounce all the way back toward 4,300, the top of the recent range here. And we've seen a solid move in that direction so far over the last 2 days. 4,000, or really 40.25 here, is going to be an early key level to watch. You can see how prices are sitting just above that zone. That's Friday's high, that's an HVN, and that's the current overnight low. 40.25 is going to be important for bulls to defend for a shot higher. Failure to hold that zone opens up a retest of these lows. So it's going to be important to see how price plays off that 40.25. Looking at the NQ and the intraday, you can see 40.60 here as the short-term zone of support. That's an area where bulls are trying to keep prices above that area. Failure to hold that area auctions price all the way back to 5-day VPOC at 39.97.25. Holding above 40.60 would suggest a continuation back toward highs at 41.09, where the shot is seeing further upside price discovery into the bull target for the day at 41.49 and 41.78. So 40.60 is the early key level to watch here. Any failure to hold that level auctions price all the way against the range in the 40.17 and 39.97s. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well. Happy Monday.